And we are live. Good evening from central London. I'm glad to be back. We missed you last week after a brief period of not coming on live, but I'm glad to be back in a very shiny central London, as you can see. It seems like the weather's turning. Certainly here in the office, people seem to be a little bit grim and they're obviously feeling a little bit chilly. But we're here to talk about the market. Specifically, we're talking about the future of property prices and also the future of buy to let. So, a lot going on over the course of the last couple of weeks. And specifically today, I want to talk about the market reports as provided by Halifax, Nationwide, and some other stats. If you're new on the channel and on the live, you'll know that we love to look at stats and just dissect it. So, as always, I'm just going to wait for anyone joining to just give me a thumbs up. Make sure that there are people listening out there, that the audio is working, and obviously that you can see a very bright Danny Valencia, at least for now, before the sun starts to go down. Hey, Leslie, you can hear me? Amazing. Thank you very much, Leslie. Much appreciated. I can see Martin online as well. Feel free, guys, to let me know what part of the world you're at. If you're in the UK, what part of the UK you're at as well. I'm always curious to find out. So let's dive straight into one of the articles that we have here, specifically when it's talking about house prices. And Halifax, of course, have their report out and some very interesting statements from there. Bear with me one sec. So let's go with this one, which is the first one I have. So this one says, sellers still taking discounts despite interest rates cuts. So despite the activity that we've seen at the moment, I mean, if you joined us a couple of weeks ago, you'll also know that we have the number of inquiries that have come in for buyers' inquiries have increased substantially, according to Rightmove. Now, despite the number of inquiries coming through and those viewings also increasing, as this report states, there is still seller discounts despite those rate cuts. Now, a lot of people, of course, attributing the current activity to the at the back of the rate cuts. The reality is that we had already seen the activity increase prior to those rate cuts. And one thing that I've seen as well is, and Zoopla took out a report from this, by the way, whereby a lot of experts saying, okay, this is the activity at the back of mortgage rates coming down, and there's so much more transactions. Now, what we saw in 2023 was a crash in transaction levels, not necessarily a crash in prices. There hasn't been a crash in prices. Anyone out there, buyers, waiting for a crash, I'm not necessarily sure we're actually going to get one. What we did have indeed was a crash in transactions last year, and understandably, because that's when we saw the peak of mortgage rates at the level that we've seen them for a very, very long time. However, right now we're seeing more transactions, and it's not necessarily at the back of immediately directly to that rate cut, but it was more so, buyers being able to make those figures work. So let's go back to this. Let's go back to this article. Specifically, there's one here from a state agency today, which I found interesting, which is the Halifax report. And just commenting on that Halifax report, if I can find it, would be fantastic. Here you are. So we're back on the house prices, mortgage approvals hit new highs. Has the market recovered? So average house prices and mortgage approvals hit new highs during the summer months, in a positive sign of the property market. Nationwide data shows average UK prices has rose as their highest annual rate since December 2022 during August. The latest nationwide house price index shows prices rose 2.4% on average to £265,000. So this compares with growth rate of 2.1% in July, but is down 0.2% on a monthly basis. Now, this is very similar to what we're seeing from Halifax as well. And I'm going to try and share with you this report. Mhm. Okay, so we're back on the same article. So this is the discount that I was showing you initially. So sellers still having a discount. The searching agent's findings supported by the property website Zoopla's recent analytics, which revealed that the stock of homes for sale continues to increase and now stands at a 7-year high, while buyer demand is up 20%. And this is important. It's critical because this is the exact reason why prices haven't sort of gone to haven't skyrocketed, and it is because of that balance between more properties coming onto the market, the lack of properties that we've seen over the course of the last few months has also kept the price in check. So we've got Rocker has found that the boost in available properties is already carrying positive impact for buyers, and sellers are increasingly willing to lower their asking price. Zoopla Analytics confirms that 1 in 5 homes were listed for sale in August have had an asking price reduction of 5% or more to attract buyer interest. Acting on behalf of one of its clients, the team at Rielco Property Search recently secured a property in Cotswolds for 12% below asking price, saving the buyer in excess of £80,000. So is it that we're reaching a market where it's a buyer's market at the moment? I don't necessarily think so. What I see, especially when we come into a market whereby something has shifted, whether that be a Brexit, whether that be an election, a general election, whatever that may be, a COVID, dare I say it, what happens is that when there is a shift, there is a lag time between buyers and sellers finding what true value price is. So sellers sort of coming away from thinking that they are in a 2021 market where properties were quite frankly sort of selling like hotcakes, and buyers moving away from, let's say, last year where there was so few transactions, and of course there were some sellers that did need to sell. But that brings me to another article in talking about sellers that need to sell. So there's a report out with regards to council tax hikes, which I find very interesting. And we have here the negotiator reporting that because of this potential council tax hikes for second homes is sparking a mass sell-off. And I find this incredibly interesting because if you've been following my channel, you know that there's been this talk of a mass sell-off from landlords for various reasons. Number one, of course, the regulation increase, and that hasn't necessarily come from Labour. We know that the Conservative haven't really been landlord friendly over the course of the last few years, especially when we look into account with George Osborne and the whole statement he gave. I think it was back in 2015, 2016, whereby there was, of course, the additional stamp duty, the removal of the wear and tear, and a whole load of other regulations that really impacted landlords. But my point is that Labour isn't necessarily doing anything radically new here. They have taken what was previously, I believe, the renters reform bill, and and they've repackaged it, rebranded it. Can't even remember what the name is right now. A renters' right bill or something of some sort, which has been published today in Parliament, coincidentally. So, of course, all of these things have had an impact with landlords actually having that mass sell-off, and more specifically in recent weeks. What's been a real hype and what's been talked about a lot has been, of course, tax hikes, especially when it comes to capital gain tax. And of course, and that's from a micro perspective with property, but from a macro, of course, there are other people that are going to be impacted. And it's all speculation at the moment, but we could probably see this coming over the course of the next few weeks as we come to the end of October. But coming back to this article, it's interesting to see that in addition to that mass sell-off because of regulations, because of the Section 21 coming to an end, because of the speculation of tax hikes in the capital gain tax, and now we have a report here saying that capital tax hikes is also responsible for a mass sell-off. So I mean, if we continue at this rate, the, the market is going to be flooded with properties because all of these changes or potential changes are driving people to just sell off their properties. So the number of second homes for sale in Pembrokeshire trebled after owners hit with 200% council tax premiums. Okay, so that's that is a huge hike. So added 200% premium to council tax for second home owners in April. It sparked a mass sell-off with the number of them being put on the market trebling. The rise came after the Welsh government introduced new rules to try and prevent locals being priced out, particularly in seaside areas. The changes allowed local authorities to change up to 300% charge up to 300% council tax premium for second homes. So I'm going to say this is more so to swerve the short let property, the service accommodation market. And of course, it's having a larger impact just on day-to-day landlords, because especially when we look at those seaside areas, um, it's interesting to see that that's where this council at least is focusing on. And of course, it has a larger impact on the property market. Now, going back to Halifax. So we have Halifax report here. So again, the topic of today is the future of house prices and where the trend is going. So if we look at Halifax, we have average house price £292,000. This is as from August 2024. Monthly change 0.3%. Quarterly change 0.8%. Annual change 4.3%. So as you can see, it is on the rise. No boom, of course, and we won't see any boom anytime soon. So just because there is positive sentiment on the market, and let's put this into context, guys. This is positive sentiment in comparison to what? In comparison, of course, to that transaction crash that we saw at the end of last year, where people and buyers just could not make those numbers work and the uncertainty that was there. So let's not confuse positive sentiment in comparison to the end of last year to any type of boom, because we are far from any type of boom at this moment in time, at least here in the UK. So going back to August house prices, so house prices increased by 0.3%, 4.3% by year on year, higher annual growth prices than a year ago. Typical property now costs £292,000. So if you guys can see this little graph here, so Halifax house price, and you've got that change there. You've got the, let me have a look. Blue line going up from annual change. You've got the green line from a quarterly basis. And then, of course, your monthly change would be the little pink one here. So we've got a comment here, Amanda Bryden. House prices increased by 0.3%. So this is repetitive. Recent price rises build on a largely positive summer for the UK housing market. Again, we can't really attribute this to that immediate cut because this was already happening. This momentum was already happening. But one thing to be very careful to understand is that, guys, property is hyper local. What's happening in the general market is quite different as to what's happening from a hyper local point of view. So just from a bird's view kind of explanation, very generic. But from a south and north divide, what we do know is that the south is pretty much very static. House prices haven't really moved. However, if we look at house prices in the north, we can see that it is shifting. Prices are moving upwards. And so when we look at the whole of the UK, when we see that both areas are doing opposite things, if we look at it as a whole, then we can see kind of this flat market. But if we go deeper, you'll see that there are regions that are in fact increasing and other regions that are flat, and dare I say, other regions that are actually dipping in some places of the UK. So here we have Halifax average house price, nations and regions house prices. Northern Ireland, we're going to skip Northern Ireland for now. Apologies for anyone in Northern Ireland. We've got here August. So here we can see this from a August 2023, September, October. So 4.8, and what's this? Index January. Okay. So anyone has any questions before I jump on to my next article? Okay. So, Danny, what do you think will rising house prices impact the ability to find tenants in the long term? I don't believe you have anything to worry about, Wise. If you are a landlord, there is a shortage of property. The plan for Labour to build 1.5 million properties is not realistic, and there is a shortage of property out there, especially when you look at the rental sector. So nothing really to be worried about that, at least for now. I think maybe what you may be more worried about, or should be keeping an eye on, is more so the amount of developers, especially when it comes to the build to rent. So what we do know is a lot of investors, a lot of developers, it's something that's becoming very popular. And that's the real competition when it comes to the day-to-day landlords, is the build to rent developers. So that will be something to look at. We will be shooting a video with regards to this and how that's going to already impacting a lot of landlords in certain regions of the UK. So we've got a message here from Andrew. Hey, Danny, hope you're well. What are the key indicators to watch for when deciding whether to invest in a property market in the current climate? So great question, Andrew, and it depends on your strategy, but I would definitely say look at the growth within that specific area. There are a number of regions in the UK that are being developed, that are set for a regeneration. And those are the areas that you should be looking at. I mean, those of you who join me on a weekly basis, you're very savvy landlords, and you also know that effectively you shouldn't be chasing just yield. It's capital growth where you win, and this is something that you should be looking at the long term. But one key indicator that this might surprise you is not so much tied into price, but it's tied in to the type of tenant and reliable tenants that you can have. Don't forget, guys, that Section 21 is going to be removed. That is a fact. The question isn't will it, the question is when, and what's going to be in place to replace it. So now more than ever, it becomes so much more important to know who you are getting into your property investment as a tenant, how reliable they are. because things are going to get a little bit more complex. There's over 170 legislation or regulations to abide by as a landlord, and recently we've had the Section 21. We've had the Renters' Rights Bill being published today, and that has I don't know how many hundreds of pages or tenths of pages, and so that's something that, guys, you're going to have to keep an eye on. It's a reality. I wouldn't be too worried about Section 21 being abolished. There are other means, should you need your property back as a landlord, being available to you. But again, it is more important now than ever to make sure that you know what quality tenants you are getting into your property. So let's jump on to rising buyer confidence drives up annual house prices by 4.3%. As you saw by Halifax, and this is just re-emphasizing that August, which is usually the quiet month for estate agents, did not slow down this year as easing interest rates drove many people to move home, says Halifax. Now, if you just joined, guys, we all have been looking sort of nationwide, Halifax, and other sort of key indicators, what's happening now in sort of summer. And we can tell that it's going to be an active autumn as well. Of course, there is some significant activity with Labour at the moment and making announcements, and we've got that budget to come at the end of October, and it'll be interesting to see if that impacts the property market. So we talked already about Halifax, and we talked about the resilience of house prices. The average property is now just £1,000 shy of the record high set in June 2022, £293,000. While this is welcome news for exiting homeowners, affordability remains a significant challenge for many potential buyers still adjusting to higher mortgage rates. Now, for those of you who have been able to jump on early today, you'll see that there continues to be decreases or at least adjustments on prices whereby sellers are achieving less than what they had initially marketed the property at. So whilst there is activity, what we do know is that there is also sensitivity to pricing. So let's jump on to Zoopla. Zoopla is always a good house metric to see. House price index August. If you've been following my channel, you'll also know how Zoopla and many others, by the way, have adjusted their prediction for 2024. Zoopla, if I'm not mistaken, was one of them who had predicted at the end of 2023 that we would be negative by the end of this year by 2%. Savills had also predicted a fall in terms of house price by the end of 2024. All, if not most, including Savills, have adjusted those predictions, and Zoopla is now saying we're going to have a 2% increase when it comes to house prices overall in the UK. But let's look at August when it comes to Zoopla. So over the first 7 months of 2024, house prices risen by 1.4%. All areas of market activity are up year on year. Price inflation has improved across all regions of the UK, remains slightly negative in southern England, but London's positive at 0.2%. So again, if you've just joined, there is this kind of contrast happening between south and north. South seems to be round about flat. I mean, you've got a positive in London, 0.2%. It's fair to say that it's pretty much flat, but you have some much positive numbers when you look at the north of England. So 1 in 5 homes have held their asking price, have had their asking price cut by 5% or more, an above average level, showing continued price sensitivity amongst buyers. Excuse me. It takes 28 days to sell a home with no asking price reduction, but 73 days if you are overpriced and then need to reduce by 5%. House prices are tracked to be 2.5% higher over 2024, with 1.1 million sales. So again, guys, very interesting to see Zoopla's flip on this. It's literally a U-turn. They had predicted a 2% drop at the end of 2024. Now they are predicting a 2.5%, and we're on track uh, to that. But of course, a lot can happen. A lot of activity happening with labor. Now, if you're a buyer, a seller, a landlord, I'm always curious as to finding out as to what your thoughts are or what your experience is right now when it comes to buying, selling, investing, or perhaps even exiting your property portfolio. So please feel free to leave a comment. We are joined from different platforms here, whether it's LinkedIn, Instagram, YouTube. So always curious. So I'm going to answer some questions here. You got Stephen James. Hello, Stephen. I believe you're new here to the channel. And how should buy to let investors adapt their strategies to cope with the potential decline in affordability due to rising interest rates? Well, I always say, Stephen, you should be working with a mortgage broker. I believe that you'll find, as well as a lot of buyers out there, and as a buy to let investor, you'll find more products right now out there. So just work with a mortgage broker. I think there is a great opportunity right now in terms of buying properties, especially those smaller landlords. When I say smaller landlords, landlords who have 2 or 3 properties exiting the market. But what we are seeing is other landlords who have bigger portfolios actually increasing the amount of properties that they have. And in fact, there was let me actually look at this. There was a survey by the Bank of Paragon, which indicated and broke down those different landlords who are actually buying more properties. And I just found that very interesting. 50 accounted for 29%, 2014 falling. Yeah, I can't find that now, but if you wanted to grab that statistics, just feel free to reach out to me. So I'm going over to the next question, and we have here from Leslie. Danny, with this demand increasing, should landlords focus on expanding their portfolio, or is it now time to consolidate? Again, Leslie, that depends on your situation. I have landlords who are actually selling up their current part of their portfolio of properties because they don't have the right structure, only to buy more properties. I have other old school landlords who've been in the game for many, many years who are just packing up and calling it a day. But it's also some lifestyle changes from their part as well. They're at an age that they just want to retire. Lettings is much more complex than what it once was. So it's just them doing sort of some different changes depending based on their lifestyle. I'm just going to change or try and change my settings on my camera because I can see I'm getting quite dark here. Hopefully that's slightly better. So yeah, it really does depend on your current situation and whether you depend on yield or you depend on or you can wait it out from a long term. I always say when it comes to property, you are looking based on a business and what the businesses do. You have some good years and you have some bad years. Now, sometimes right now, what we do know is that the mortgage rates have reached its peak, and we have some good times to see, hopefully, in the next few years. A lot of landlords have had it great over the course of many years with cheap money, and that changes, and that's just the nature of the markets and business. So, guys, I'm going to jump on to this next. Actually, let's talk about the biggest news for landlords right now. We're going to digress from future house prices. So if you guys have just joined, we've talked a little bit about future house prices. We've seen that there's been an increase overall when we look at quarterly basis, when we look at monthly basis, and when we look at annual growth. and we see that we're on track of house prices increasing overall 2.5% according to Zoopla. But right now, part of today's live is also talking about the future of buy-to-let. And today, what we have seen is the bill to ban Section 21 evictions published today. So Deputy PM Angela Rayner announces government is taking its first step towards scrapping Section 21 fault. So a bill to ban Section 21 no fault eviction is to be published in Parliament today, signalling the government's intention to move quickly after winning the general election in July. Now, this is the biggest issue we have with this, guys. The Section 21 being abolished, again, that's a fact. It's going to happen. And I think what should be looked at very carefully is this part here, because what's going to happen with the court delays? And this is Property Mark making a statement here. So Property Mark is making it clear it isn't happy with the move and has made this obvious in comments released today, especially as there is no commitment to deal with the backlogs in course. And this is the key issue. So Timothy Douglas, head of policy campaigns of Property Mark, says, whilst Property Mark acknowledges the drive towards improved standards, the UK government must fully understand and recognise that the impact that these changes will have with agents up and down the country left wondering how this legislation will help meet the much needed demand for homes for people to rent. There must be a commitment to ensure court systems and grounds for possession are robust and fit for purpose. So, with such significant changes to the current tenancy regime, there must be a commitment to ensure court systems. Furthermore, without an enhanced, effective, and well-resourced enforcement regime from local authority, it's unlikely that any benefits from this reform will be realized. So, Section 21 banned. In this statement released this morning, the government said no fault eviction will be banned and renters will receive greater protection and security from eviction thanks to historic. Okay, guys, so any comments about that, let me know. But of course, this is something that a lot of people already saw coming. And so here we have Martin. Would be good to know about financial landscapes affecting rental yields in different regions of the UK. So we have a video coming out at some point over the weekend, Martin. Perhaps that would be something that you'd like to view. We did talk about different regions and yields across the UK. But generally, if you're looking at yields, you're definitely going to have to look at up north. If you're looking at sort of the long game and perhaps, dare I say, better quality tenants, then you have to be very careful as to where you invest. And there are lots of parts in north that are good investments. I mean, to name a few, you have Durham, you have Leeds, Liverpool is risky, but also good yields. You have quite a few places. I mean, if you are quite brave, Scotland at the moment is providing some great yields. But then again, not sure if many landlords want to go up north, given the recent government changes and the landlord bashing up there. So there's a tip for you, Martin. So Martin, sorry, just to make more sense, how is the changing financial landscape affecting rental yields? Okay, it seems the same in different regions of the UK. Okay, great. So guys, if there's anything specific that you want to kind of hear about, always feel free to give me a shout. Okay, and just let me know. At the moment, I'm just going through the biggest sort of headlines, but right now I'm going to go to Good Lord rental yield, and they give some very good stats. So most of our viewers are landlords, so I'm sure you're going to find this valuable. So year on year, rent continues to climb. The average cost of new rental home in England was 7% higher in August compared to the same last year. August 2023, rents sat at £1,300 over the last month. This has risen to £1,400, a rise of £91. So the highest year-on-year shift has once again been recorded in the southwest, where average rents are up by 13%. So we're looking at double digits. I mean, a lot of poor people, including myself, thought we wouldn't see double digits as we've seen sort of in previous or recent years. But as you can see, I mean, the market continues to be strong. And I'm not necessarily sure if government is really helping the people they intend to help, which is, of course, tenants. So this is closely followed by the East Midlands and the Northeast, with both regions seeing year on year rent rises by 9%. The West Midland and Greater London continue to see smallest year over year rental increase. So we've got this little graph here, which is great. And I've butchered it somehow. Okay, there you go. So you got East Midlands, Greater London being this big green one. This one here. So hopefully you can see that. And we got this graph here, and you got East Midlands, 913, Greater London, 1,800, 913, Greater London, 1,800. What we do know is more inner London is like £2,300, which is crazy compared to sort of prior to 2020. So record rents despite month-on-month dip. So after rents surged during July, August saw a small decrease in average cost of property in England. Rents dipped by 2% across England, taking prices down from 1,470 to 1,300. 438 in August. This mirrors the same trend in 2023 when rents dipped between July and August, which I find that interesting because, especially when it comes to London, what we do know is that rents actually spike sort of during the summer months. So this might be between July and August, but it will be interesting to see what happens in September, where a lot of people are relocated and a lot of students come into central London, of course, because of the university. What I do know is over the course of the last few weeks, the rental market here in London has been absolutely crazy. And it's typical for this time of the year. So, yeah, let's have a look what else we have here. If we have any other questions, I don't see anything coming just for now. What we had here, annual house price growth. So this is the other article I want to share with you, which came out on the 11th of September. This is from, I believe, a state agency or landlord today. Rental stock surges since interest rate cut. So I find this quite interesting that there is a connection between um, mortgage rate cuts or interest rate cuts and a link between how many rental properties come onto the market. But let's come through it together. Let's find out because I'm not exactly sure where that links come into. Because in my mind, it's like, okay, so if there wasn't a interest cut, or if there wasn't a cut, then the landlord would just sit on the property and not put it on the market for rent. I don't know. Let's find out. So landlords appear more keen to list property for rent since interest rates were cut in August again, and so they're not keen to put it on the market if there wasn't any interest rates cuts. But it may be temporary as landlords fear tax clampdown in October budget. Zero Deposit analysed available rent stock across 15 major cities in Britain, looking at the total number of rental listed on the market in the 30 days since interest rates were cut from 5.25%. I think it's my opinion that I believe that there is too much credit given on that rate cut. Things sort of suddenly happen straight away and the market shifts straight away when there is there's a lag time, and I'm pretty sure there are other factors and other influences here at play. So the research shows that across all major cities, there has been a significant increase in the number of homes being listed to rent. In Edinburgh, 435 homes have been entered into the rental market in the last 30 days, equating to 75% of all current stock, and marking 300% increase when compared to the total stock. Neighborhood in Glasgow, sharp increase as well. The influx of new rental market stock has also seen available stock levels increase by more than 100% in Bradford, Bristol, Brighton, 130%, Manchester, 190%, Cardiff, and you got Sheffield. So even in Leeds, where this increase in stock levels has been most measured, the 576 new rental homes have reached market last 30 days. So all very interesting data. Okay. So, guys, we have talked today, of course, about the future of house prices. Again, it's getting dark on my end, so I'm just going to be wary of adjusting this ever so slightly here. So, there is a lot of activity when it comes to buyers. Buyers are still sensitive when it comes to prices. Let's not forget that although mortgage rates have reduced ever so slightly, we're still at in a very price sensitive market. Landlords, especially, many can't make those numbers work. Some of them selling up because of that new mortgage rates coming into play and just readjusting to current markets. Let's see if we have any other questions for now. No questions. So what I'm going to attempt to do is share with you the which one is this? Average age of landlords purchasing new buy-to-let properties falls as 30-somethings target. 30-something target portfolio growth. So again, when we talked about landlords actually exiting the market, there's a certain demographic of landlords actually increasing their property portfolio. And it's understandable that those old school landlords who entered the market in the 1990s, early 2000s, a lot of them are coming to an age where they are thinking of a different lifestyle. The industry is much more complex than what it once was, but also when it comes to a lot of properties that they may have on mortgage, it's also problematic. So the average age of landlord acquiring new rental property with buy-to-let mortgage has fallen over the past decade, driven by some strong growth in the proportion of landlords in their 30s. Paragon Bank analysis of industry data shows that average age of buy-to-let landlord acquiring new properties with mortgage fell from 46 years to 2014 to 42 years last year. The reduction in age has been driven by the proportion of purchases amongst landlords in their 30s increasing over the period of 2014 to 2014. 21% of purchases with buy-to-let mortgages were made by landlords in their 30s compared to 31% last year. So could it be that there is this disappointment? So landlords had it so good during a period of time, those old school landlords, and now they're exiting the market. But new landlords in their 30s can see it. I guess it's the age they can weigh out the current sort of downside of things. And maybe those landlords who are in their 60s, they're not willing to wait another 5-10 years until the market turns in their favor, potentially, because there's no crystal ball here, right? Okay, guys, I have here one question from Samantha. Can buy-to-let investors mitigate the risk of vacancy periods as rental completion increases? Competition, apologies. I'm not sure what part of the UK you're at, Samantha, but certainly I'm not seeing sort of a major competition here in the south. But and certainly not seeing major void periods. But the best advice I can say to you is definitely, from a competition point of view, better quality properties is something that we do see in today's market. I would say also look at service accommodation, short lets. It's something that's becoming quite popular, but it is very, very laborious as well. So there's also new regulations coming from the government with regards to that. I hope that helps, but yeah, the quality of your property is going to have a huge impact, Samantha. So just make sure you keep that up to date and make sure that you are putting your property on the market on that sweet spot which is going to be around about 6 to 8 weeks. I hope that helps, Samantha. And let's see if we have anything here. Uh, I believe that we've gone through all the articles. So we are running ahead of schedule. We're 40 minutes in. And if there are no other questions, I believe that my time today has been served. And so, for those of you who have joined recently, we did talk about the future of house prices. We talked about it's on track on being 2.5% higher than what it was at some point last year on annual growth. We also talked about the buyer's demand, but still being sensitive to pricing. And then we talked about buy to let. We talked about the labor and being just aware of that bill being presented today in Parliament. I hope that's helpful, guys. This is being recorded. So if you want to find out more about the future of house prices and buy to let, just feel free to watch the recording. And hopefully that will be helpful for you guys. Thank you very much, guys. Have a good evening and stay safe.